Welcome to WCrypto.
Hello, my friends. Welcome back to WCrypto. Today we're diving deep into the M2 money shift for Bitcoin, an advanced indicator that tracks the impact of global money supply on Bitcoin's price movements. If you've ever wondered why Bitcoin sometimes pumps or dumps seemingly out of nowhere, this could be one of the key factors driving those moves. The M2 money supply represents the total amount of liquid money circulating in an economy, including cash, checking deposits, and easily accessible savings. When central banks increase M2, they inject more liquidity into the financial system. And historically, Bitcoin has reacted to these shifts with a delay of around 70 days. This means that by analyzing M2 trends in advance, traders can potentially anticipate Bitcoin's future price movements before they happen. What makes this indicator even more powerful is that it integrates M2 data from multiple countries, including the United States, Europe, China, Japan, the UK, Canada, Australia, and India, all converted into US dollar equivalents for easier comparison. This allows traders to analyze the impact of liquidity on a global scale, rather than just focusing on the US Federal Reserve. In the past few years, a strong correlation has emerged between Bitcoin's price action and shifts in the global M2 supply. This correlation isn't just theoretical. When liquidity increases, investors tend to move capital into assets like stocks, commodities, and crypto, fueling price appreciation. On the other hand, when central banks tighten liquidity and reduce M2, risk assets, including Bitcoin, tend to decline. One of the most useful features of this indicator is the slide days forward setting, which lets you shift M2 data by up to 500 days to compare different timeframes and find the most reliable correlations. Since the impact of M2 on Bitcoin isn't immediate, sliding the data forward can help reveal patterns that might not be obvious at first glance. A common approach is to test different forward shifts, usually around the 70-day mark, to see how well past liquidity cycles align with Bitcoin's price action. Alongside this, the indicator also plots total liquidity, summing up the M2 supply of all included countries to give a broader perspective on global financial conditions. If total liquidity is rising, it could be a leading signal for a Bitcoin uptrend, while a drop in liquidity might hint at an incoming correction. So how do you actually use this indicator in a trading strategy? First, apply it to your Bitcoin chart and activate M2 data for the countries that are most relevant to your analysis. Then experiment with the slide days forward setting to see which time frame offers the clearest correlation between liquidity shifts and Bitcoin price action. Keep an eye on major changes in total liquidity, especially sudden expansions or contractions, as these could signal upcoming volatility. When liquidity increases, it often leads to stronger market confidence and higher demand for Bitcoin, while liquidity tightening can indicate risk-off behavior, where investors move funds out of speculative assets and into safer investments. Right now, the M2 money shift indicator is signaling that we're heading into a period of increasing liquidity, which historically has preceded bullish moves in Bitcoin. If we follow the 70-day lag that has been observed in previous cycles, the data suggests that Bitcoin could be entering a more favorable environment in the near future. Of course, no single indicator is perfect, but when liquidity is expanding across multiple economies, it's usually a leading sign that risk assets, including Bitcoin, are about to benefit. This adds another layer of confidence to the bullish case for Bitcoin, especially if we see strong M2 growth in the coming weeks. Understanding liquidity cycles is one of the most overlooked aspects of Bitcoin analysis. Many traders focus solely on price patterns or on-chain data, but macroeconomic factors like M2 supply shifts can provide a high-level perspective on where the market might be heading. If you've been following Bitcoin's major moves over the past few years, you'll notice that many of its biggest price surges happened during periods of expanding M2 supply, while crashes often coincided with liquidity tightening. By incorporating M2 analysis into your strategy, you're essentially looking at one of the biggest underlying drivers of Bitcoin's long-term cycles. If you've never used this indicator before, now is the perfect time to start experimenting with it. There's a reason why some of the top analysts in the space are paying attention to liquidity trends. They provide an edge that many traders overlook. Let me know in the comments if you found any interesting patterns using the M2 money shift indicator and whether you think liquidity cycles are the key to predicting Bitcoin's next move. Make sure to hit like, subscribe, and turn on notifications so you never miss an update. And see you in the next one.